And today we are wanting to tackle section 11, 12, and section 13. Now, section 13, fortunately, we don't have to go to every single one of these documents in the training today. I'm just going to have a look at one of them because they're all exactly the same. They are there just for various different cycles, different working papers for each cycle. But in the planning, we are going to go through quite a lot of these, go through sort of the basics of what's happening in section 11 and 12, and then go and have a look at a few specific. So I hope everybody is ready to go. And we can get started on our first document, which is 11.05. Now, as I open up document 1105, I want to just point out that what I'm going to tell you about now actually deals with 1105 and 1110. The difference between 1105 and 1110 is really just that 1105 has got some extra procedures that need to be performed when we are performing a new engagement, whereas 1110 really just looks at opening balances for the current engagement and for the current year, assuming that you had done the audit in the previous year. Now, I just see that there's some sort of Windows bug at the moment that I'm not seeing my bottom corner of the sheet. So I just want to resize this window quickly. For some reason, my window is cutting off at the bottom. I don't know what's causing that. But anyway, now I can see the tabs. So when I get to 1110, they are not going to be the same number of tabs visible. You'll primarily just see the opening balance test, the alternate TB, and all differences. Now, these other tabs relate to procedures that we need to perform when it's a new engagement. You did not audit this client last year. Also, just a note, do consider if it is the first year of trading of an entity. Some of the stuff is not going to be applicable because you wouldn't have had a prior year balance that you actually need to audit and check. So again, if it's a continuing engagement, or sorry, if it's a new engagement and it's a first year audit, you're probably not going to go into the level of detail that I'll go through now. But the intention here is to first and foremost go and identify whether we have gotten permission to contact the previous auditors. Coming to us saying, please audit us. We are going to check, have you been audited before? Who were those previous auditors? And may we go and speak to them? Came up quite a bit. I remember from my study days, the various procedures that you need to go and perform and look at what the previous auditor did. Now, the question asks, first and foremost, did we get permission by the client to contact the previous auditors? Now, if I say, yes, I did get permission, all right, then it asks me the question, did we make an appointment with the previous auditors to review the working papers to test the opening balances? So we're now actually physically asking the predecessor auditor, can we come and look at your working papers in order to assess balances? And I need to now make answer the question, yes, an appointment was made, or no, the auditor refused access. So we were not allowed to go and see those previous working papers. And so then what we need to perform is action 9 and 10. And you'll see now we go from action 1 to action 9. So there's nothing else that then forms part of this file. That's correct. Actions 2 to 8 relate to when we can go and see other working papers. So these first two questions are critical to answer in order to get the correct outcomes. Now, in a case where you cannot go to see the predecessor auditor's working papers, whether it's refused by the predecessor auditor or where the client refused you the right, the permission to actually go and speak to that previous auditor, Action 9 goes into quite a lot of detail about the types of procedures we now need to perform. And what we then need to go and do is that you'll see at the very bottom there, it says alternate procedures. And that's this one over here, 110506. And you now need to go and document, how did you verify the opening balances? Now, there's an array of different approaches that is addressed here. It's from A to E, and you might find that some of these aren't even really catering for everything that you might want to look at. But folks, this is what we need to go and do. And so you need to go and consider which ones of these are appropriate, how I'm going to be performing it. Essentially, it's giving you guidance like, I'm auditing this year's balance. Can I roll that back and do a little bit of an audit on last year's closing balance, which is this year's opening balance, as part of my normal audit procedures? But that's what we need to document. What is the alternative procedure? And what is the result? You'll see that now that I've put some information in, the next row becomes available, and there are a number of hidden rows that will open up as you go through the process. So here you now need to go and document all of those alternative procedures that you performed because you were not able to go and view the working papers of the predecessor auditor. All right. And then at the end, we need to make a conclusion. Do we think that the opening balances contain misstatements that materially affect? Are there misstatements that affect the current period's financial statements but doesn't require a modification? Or are there no misstatements that we can identify and that accounting policies are consistently applied and are appropriate? Okay, so those are the various conclusions we're wanting to get to. Now, let me roll this back, and I'm going to say, yes, the client gave us permission, and yes, we were able to make an appointment. All right. Now we need to conclude with or continue with actions 2 to 8. Okay. So what did you actually examine? What's the file's description that you got? What was the general content? Were all of the working papers required made available to us? So maybe they denied you access to specific working papers. I remember a case where I needed to go and speak to a predecessor auditor, and the only thing that they would give us access to was the taxation around the deferred tax calculation, because obviously there's a lot of detail around deferred tax and stuff we need to do to be able to roll forward that information year after year. And that was the only stuff that we were able to view. But what have they given us to look at? What is the adequacy of the work that we've been able to perform? So there's a whole then set of responses that we need to work through. Then consider adequacy of further audit procedures performed in response to assessed risks. So are there specific areas that you've gone and reviewed, and you can go and make any comments on that? Sorry, Delian, is it your audio that's on there? I don't know if you're intending to ask a question. All right. Are there uncorrected misstatements carried forward? So there's a whole lot of questions here to take you through that process. I don't want to necessarily go through the questions one by one, but this action 2 to action 8 is all about cases where we actually could go and see the file. And then what are the outcomes? What are the various responses that we have to that? Okay. Now, if we go one step further back than even that and just say that the client refused us permission to actually go and speak to the previous auditor, we basically left into the same position as if the previous auditor didn't want us to see the working papers. And so it's really just action 9 that we can document. We also then have a sheet about specific account balances verified. So you can then come here, list any specific balances that you managed to obtain supporting documentation for, be that through viewing the prior file or whether it's new procedures that you did, and you can then comment on each of those. All right, so all of what I've discussed now is unique to the new engagement. When I have a continuing engagement, both will have this schedule available. And this working paper was kind of built out of years and years of frustration of my own in opening balance testing. And it's also out of years and years of frustration for our support team. You know that our number one support issue that we get is still retained income out of balance. And that's often because the opening balances are not correct. And so what we do is on the left-hand side here, the balances that you see here are imported as the trial balance line item sitting within Draftworx. So it's going to come from our working trial balance, the prior year numbers. Okay. Then it asks me, bring in an alternative TB, and I'll show you where that happens in a moment. But I basically need to just indicate whether this trial balance is what I had as the auditor from last year. So did you take the final audited financial statements, roll that forward to a new year? Then your TB is from previous auditor, or in this case, it might be yourself. But that's the audited trial balance at the end of the year. If you imported it from the client, then what you need to import is a trial balance from the previous auditor on this alternate TB, which I'll show you in a moment. Otherwise, I've got to switch the setting. So really what I'm doing is I'm just naming which of these is the audited and which of these is from the client's accounting system. Now, we have been asked a number of times, why do we include income statement line items here? Now, the reality is that many accounting systems do not have a facility to give you a true opening balance trial balance. Remembering that the moment that you have the income statement with a balance on a trial balance, it cannot be the opening trial balance because there cannot be entries in the income statement. And most accounting systems will let you get a trial balance as at the end of a period like month one, but that's not the opening balance. So it's often easier just to get the prior year closing balance to compare. But we do have a setting if you want to remove the income statement items. You can go and remove those income statement line items with the setting. So then it will focus only on the balance sheet items for the comparison. I'm going to say no. Now, before today's session, I did already import a alternative TB, and that's done on this sheet. And what we ask is for you to get it into Excel, get it into this layout, so account number, account name, and balance, and then copy and value paste it into this alternate TB. Now, because I imported the corrected TB, it's immediately finding a balance, a link for every single item on this. And on the far right, you'll see that it's finding all my differences are 0. But folks, this formula is quite clever. If I go and, for instance, go and change the sales GL account number to 001 and go back to this test, it's now going to see that it doesn't have a match for sales. And it'll go and add it at the bottom of the alternate TB comparison and show that there's a difference. So we do very specifically go and look at the format, the actual GL account. Now, if there are slight differences, or if your client has, for instance, changed their accounting system, and so the account numbers are in a different format, or you imported them differently in the last year, then we can't really make this comparison for you anymore. It is going to be limited to correctly formatted account numbers. What we also do find sometimes is, for some reason, the account numbers have got a space, for instance, at the end. Let me make it correct, but I've added that space, and then it's going to see, hang on, I don't have an account 1000/000 space. So do look out for formatting issues, funny hidden characters. And also we do sometimes see that some of the numbers end up coming in as text rather than a number. And then it's also going to have a problem sometimes getting that match. Okay, I think I've not given you the best example because it was still able to find the value in this case, but we do sometimes get some numbers that are not pulling through correctly because of formatting. So if you are finding issues, do go and check the formatting to make sure that you've got the formatting correct. But otherwise, this is going to be a fairly clever system to help you identify any differences. Let me go and just, for instance, change the VAT account, and I'm going to go and add a second one, new account, and I'm going to make it Now, the first thing it's going to tell me about this TB is that it's going to tell me that the TB I've imported is out of balance. Now, that could be as a result of I've got the wrong TB, or there could be some items that are formatted as text instead of a number, so it's not able to pick up the values correctly. There could be a number of things, but the first thing to look out for, folks, is make sure that your TB is actually in balance that you're comparing. And it does look at the Draftworx one as well as the imported one, but do go and have a look at that. Then it'll then go and list in a difference. And what it will then do is it takes all these differences to this sheet, all differences. And it now lists every single account where it shows you what was the balance in the TB from Draftworx, what's the balance in the TB that I imported to this alternate TB, and then I can go and make comments. Now, stuff to look out for here is we're not really worried if, for instance, last year you did a reallocation from repairs and maintenance to a different GL account, maybe a small tools expenses account, or reclassifications between legal fees and consulting fees, for instance. Yes, that has a potential tax difference, but in terms of my opening balance test, I'm not too worried about those. What I'm more concerned about is where numbers are shifting between balance sheet and income statement items, which could result in misstatements in the opening balance. You might have, for instance, though, gone and done reclassifications between, maybe you got credit balances in your debtors and you moved it to the creditors. That's okay as well. Make a comment. But we're looking here for a comment for these differences. Why do those differences exist? Does it match to journals that I've processed? Maybe the client hasn't processed the journals. What I often saw is client didn't process my audit journals. Client processed my journal entries, but put it in the wrong financial period, or actually just did them completely wrong, whatever the case might be. There are various reasons why this might have happened. So we want to go and identify that my opening balances are correct. Now, folks, this template is a best effort. If there are various odd things like lots of new accounts or account numbering changes, obviously, then you will need to go and do one of these on your own and it is a bit more of a painstaking process, but we've done our best to try and give you this comparison. If this doesn't work, if it doesn't information, then please go and import your own working paper for this. But a lot of the time you'll find that this works really well. It is limited, I think, to about 10,000 line items. So if your trial balance is massive, you might run out of space, but there it is for you. And that's looking at those balances and coming to those differences and documenting them. Okay, so that's 1105, and you'll see the exact same thing in 1110. Based on a new or a continuing engagement, you just need to mark whichever one of those is not applicable as not applicable. All right, so let's move on to 1115. Okay, 1115 is the engagement team discussion agenda document. Another term that we could use, one that I was familiar with, is a kickoff meeting. And here we are wanting to present some key points to the audit team at the commencement of my engagement. And so you would go and say, who's there, who's absent, and the hope is that all of the audit team is able to attend this meeting. The format of this document is intended to give you an agenda for this discussion. Now, you might choose to go and pre-populate some of the comments and information and responsibilities and due dates if you wish. But the idea is that you could also just sit with this document during your engagement meeting, your kickoff meeting, and then raise any pertinent comments as you're going through. Now, I did speak last week about the different coloring, and this is the first time that we'll now encounter this darker blue coloring as well in section 11. So I'm hoping in the video or in the webinar, you're able to see this darker blue. And the intention is, once again, folks, this stuff will roll forward to the new financial year. So we will try and help you out next year with some of these key comments that you raised during last year's engagement meeting. That doesn't mean you can just ignore it next year and go on. You might need to update that information. But if that does happen, what I would suggest is you copy and value paste the value that's coming in with this formula, which is trying to pull the value from my prior year file, and then just edit what I need to so that it can again roll forward to the next financial year. Responsibilities and due dates, folks, this is up to you how much detail once again goes into this document. If you're dealing with a very small client, a lot of the stuff you might just decide is not applicable and you're not going to put anything in there. But it does create a nice broad framework for you to enable you to go and have this discussion and make sure that you're at least covering the most important points. Just want to scroll through slowly. The one keyword that I'm looking for is fraud. So here we are talking about potential management override of controls from ISA315. Here's my revenue recognition, managed response to any of risks that have been identified in this areas. What ways possible could the entity be defrauded? Now, this might need to be quite a long discussion in some cases. And if that is the case, then please go and create a separate working paper instead of trying to complete a book in one cell. That's not going to make it easy for review purposes. And then you can roll forward that document year after year. That's not a problem. But at least then you've got the hyperlink and a reference to where you'll find that information for future purposes. As it is, I've deliberately made my it does generally run a whole lot better in cases like this. But already you'll see I'm struggling sometimes with the scrolling because some of these questions get quite long. And even the question can sometimes become quite hard to read. So if you then start putting a lot of information in here, it can become very difficult. So our advice always is where the provided space is insufficient, create your own working paper and document it in there. All right. But once again, I think the most important thing is, folks, the level of detail is dependent on the complexity of your engagement that you're busy with. The other thing that we pick up here for the first time is we're asked a question about risks very specifically. Now, as we go through section 11 and 12, you're going to see this over and over and over again. We are going to be asking about risks constantly, because that's the point of section 11 and 12. It is to identify risks. So don't be surprised if you see this everywhere going forward. The way we ask it, however, will change from document to document. Now, in the case of 11.15, we are really just asking identify the risk. So I can now go and document a new risk identified. Okay. As soon as I do that, it highlights in yellow, signifying a compulsory input field. I need to document, is this a business or a fraud risk? Now, the terminology we've chosen, business, we are actually in discussions about changing this in future just to speak about inherent risk. A business risk is basically any risk that we identify that does not meet the definition of a fraud risk. Now, a fraud risk, it's management intent. It's today, it might cause an error. There is intent to misappropriate, misstate, or defraud. That's what brings in fraud. If it's just something that could sometimes cause an error of posting, then it's a business risk. So if anything that's not a fraud risk becomes a business. So I can then go and document another risk. And I'm going to say that one's a business, for instance, a business risk. Now, the way we have decided to document risks in RAC is that you document the risk on the working paper where you identify the risk specifically, so that when you're reviewing the file, you don't have to go back to a risk register somewhere else to go and determine if there's a risk, but or where that risk is coming from, or vice versa. It's always quite visible where it is. We do carry these automatically to our risk registers for you, and that we'll deal with next week. But for now, all you need to be doing is, if you identify risks, raise them and then classify them as a business or a fraud risk. The rest comes next week when we look at assessing those risks. Now, I always say, please be very careful. Don't go and try and find as many risks as possible. This is not an audit exam. Here we are trying to find the pertinent risks that are likely to cause misstatement in my financial statement, not risks about whether or not it's going to rain one day, and therefore that might be a risk. We're looking for real, genuine business and fraud risks that are likely to impact the company. All right. So that's 11.15. Document 11.20 is a review of prior year audit report and management report. And its intention is exactly what it's calling itself here. We want to go and look, and we want to now go and see, are there things from last year that we need to consider being risks this year? It's the risk identification section. And so we're documenting knowledge and coming up with risks. So the first question, what type of audit opinion was issued in the prior year? Was it unmodified, emphasis of matter, adverse, disclaimer, or qualified? All right. So hopefully it's unmodified. Then there's not too much to take from the audit report. However, if there was an adverse opinion or a disclaimer, it's going to ask you to describe the reasons for the modification. So you can then go and document what happened. And it then asks the question, have risks been identified based on this opinion? So if you have a disclaimer or an adverse, there's generally going to be quite a long paragraph. And probably even you might want to go back to your audit file of the last year to see, are there risks that I need to raise? And if I say yes, then we need to go and document the risk description and tell me again, is it a business or fraud risk? Exactly what we saw in 11.15, raise the risk, allocate that risk to business and fraud. Then we follow the same process with the management report. Now, it first just asks, is there a management report from last year or not? If there isn't, obviously, then we can't raise risks based on last year's management report. But if there is, we then go and do a summary of last year's management report in this file. So just a brief summary of management's response. Have discussions with management and see if any actual steps have been taken by management to address management report. And then we ask the question, is there a continuing risk? And if there is, describe it. Again, tell me, is it a business or a fraud risk? If there is not a continuing risk, then obviously we stop there. We don't need to raise a risk in this file anymore. So it's a fairly simple document, but quite important in the process, because if we do not consider last year's report or last year's management report, there could be things that we miss in the process. And that's why we have this document popping up in this section to go, let's go and actively look at those documents and make sure we're pulling in the pertinent information. Then 11.25 is the last document in section 11. We're still part of the planning and risk identification. But what we do in 11.25 is we try and build together for you a very basic preliminary analytical review. And so we go based on, as far as possible, the various financial statements sections that you'd see on your financial statements. We put the link into the appropriate lead schedule, and we have a look at the movements over the last 2 years. If you don't have a third year imported, obviously that's going to be 0. but we then go and look at what's the percentage change that we see in each of these line items. I always do remind folk, please go and have a look and make sure that the numbers that are being pulled in do make sense. In case of any unusual linking, you might need to go and update some of these values if necessary, but otherwise there are the values, and you can then go and look at that percentage comparison. We do also provide a whole lot of additional items under subtotals. Now, there are a lot of extra leads that we've built into Draftworx. And so if any of those have a balance, we'll also show you based on those lead schedules what's happened. If you want to go into a little bit more detail, you can then go into more detailed leads and look at the movement for the year. Or you could even go and do your own comparisons. So you could go and, for instance, say here, I want to go and look at revenue class A, so a specific type of revenue. I can use this drop down, and it then lists all the links that are actually used in this file. And I'm going to say, for instance, use I000.001, and it pulls it in. Now, this is a very simple trial balance, so that revenue actually does agree with the revenue that I have here. Oops, sorry, I scrolled too far. So there's not too much funny happening there. Obviously, I'm not sure yet, is it a income or expense? So I'm not changing the sign, but that's not too much of an issue here. What you can also do is you can go and customize this even further, and you could go and change that link to put in wildcards. So question, question, question. So maybe you've got multiple links that are linking to revenue, and you want to break it down to different classes of revenue. You can go and edit that, and this will then update it accordingly for you. The next step in the process is then to go and document management's comments for deviations. I think one of the key things to just be aware of here is we don't necessarily want to lead management as to the answers. So if you go to management and say, look, property, plant, and equipment has increased by 40% from this year to from last year to this year, the answer that you get from them might be different than if you go and say, well, tell me. They might then say, oh, you know, we sold off a whole lot of assets. And then you've got to go back and say, well, that doesn't agree with my understanding from what I'm seeing on this preliminary analytical. I'm seeing a growth, but management is telling me about a decline. Does that affect my assessment of potential risk in any way? If we have a look at this as an example, for instance, trade and other receivables increased by 222%. So you go to ask management, what's happened with trade receivables over the last year? They might tell you, look, we've got a few very large government contracts close to year end. So we've seen a massive growth in our trade and other receivables. Okay, that tells me management understands what's happening on their financials. I don't have to lead them. And hopefully management are aware of what's going on. And then I could start thinking, well, does that raise a risk? So I could then go and document something. What's my comment? This seems in line, but I then might want to say, you know what, recoverability. Okay, and then I'm going to say that's a business risk. At this point, there's nothing in here that tells me this is a potential fraud risk. So there's just a business risk that if your trade and other receivables have grown so much, sure, are they recoverable, or are they maybe not writing off? We do highlight any items that show a deviation of above whatever's percentage you set here at the top. Now you can go and change that to 26%, 25%, or only focus on material deviations. But this is entirely up to you. Once again, how much detail you put in here is entirely up to you. You can mark things as not applicable. It's your document to go and document your understanding of the business. The other thing that I want to point out is we once again do have drop downs available for you to go and shift what you're comparing. So are you doing an interim? Do you need to use final for whatever reason? You can go and change these drop downs. You can go and compare it to budgets. For instance, if you want to not budgets, earlier prior, earlier interims, earlier openings, So we don't bring budgets in here because we're looking at real numbers. So those drop downs are available for you, and then you can document as appropriate, as applicable for your client. The next sheet, we look at various business ratios. Now, we've gone and pre-calculated a number of the general ratios for you, liquidity ratios, and then we've asked for each one to just go and put any comments. And then once again, do you see that there is a risk of any sort? Now, I just want to scroll down, and we've got a ratio here, the days sales and receivables, and you'll see that it's gone from 36 to 109. Now, this linked to what we saw here, right? So we're actually coming to the same answer, but just asking the question in a different way, because there we're just looking at the gross growth, but here we're looking at a ratio growth. Now, you might say, well, hey, recoverability of debtors is a risk. But what I want to point out now is that that creates a duplicate risk, which we don't really want to do. You don't want to raise the same risk 10 times because you're going to end up having to assess it 10 times. So at this point, I can say there is concern for recovery, but this risk is raised in 11.25.01. And then I'm going to say, no, there is not a risk that we raise at this point in time, and leave it at that. Otherwise, you're duplicating stuff. So you can work through, again, these ratios are only ever a guide. They can never be an absolute answer as to whether or not there is a risk. But we then also have the Altman Z-score. Now, if you haven't heard about it, there is a link to the Wikipedia page. Briefly, it was brought about in the 1960s, late 1960s, and this calculation has proved over time to be 80 to 90% accurate in predicting bankruptcy within 1 year after the event. So it's actually quite a good going concern calculator. Once again, it's not perfect, but that's fairly good odds in terms of predicting bankruptcy. What this will lead you to do is it's got some various quite a complicated looking formula. You can go and look more about it in the Wikipedia page. But it basically goes and tries to determine whether this entity is in a safe zone, a gray zone, or a distress zone in terms of this Z score. There are different ones available. There's one that's the original. There's one for private firms. There's one for non-manufacturing and emerging market entities. And the only documentation you need to add is the market value in terms of equity for the first one, a book value for equity in the case of the second one, as well as a market value for equity in the third one. How you determine that is obviously up to you. You might want to just look at net asset value, but we couldn't pre-populate that. We couldn't create that decision for you. But in all three cases, this entity is sitting in the safe zone, so I'm probably not looking at any bankruptcy risk. There is no going concern risk. It is only one indicator. If you don't want to use the Z-score, you can just close the grouping, not a problem. If you want to, you can open whichever ones you're wanting to look at and make comments on. And ultimately, we wanted to provide a conclusion on the planning analytical. And based on what we've had and based on the comments we've received from management, we might want to say something here like management seems quite aware of the movements for the year. None of their explanations differed materially from what we were seeing in our analytical review. Or maybe you want to say, in some areas, management didn't seem to have a full grasp of exactly what's going on in the business. So those must become focal areas. You could say risks raised. Whatever it is, go and provide a bit of a conclusion on what you feel about this entity based on this preliminary analytical review at this point in Action 9. So that, folks, is document 1125, and we're now done with all the Section 11 documents, and we're now going to move on to Section 12. Okay, 1205 is our overall audit strategy document. And once again, this is largely going to depend on your professional judgment when we start looking at the amount of detail inserted. I do once again want to point out the existence of these darker blue cells. So we do roll forward this information for you year after year. Obviously, you need to go and update that information if something has changed over the course of the preceding year. But the kind of information that gets put in here, it might be stuff you need to come back later and recomplete, but it's giving you a little bit of a terms of what you're expecting to see on this engagement. So we start with timing and scope, for instance. And here we start speaking about deadlines. So you can then go and complete as much as you wish about the deadlines. There's a whole lot of space for key dates of various things, including inventory or stock count. Now, the reality is you might have only created this audit file some months after year end, so the stock take should have already happened. So again, that's why I just say it's up to you to what extent you complete information on here, but it's there to provide this generic information as you go through. Any areas of special concern, you can then go and document any considerations that you want to raise at this point. Any areas of complexity. This is intended to be just a little bit of a document for each team member to go through and get a big picture of what's happening in this engagement. We pull through some information like in section 10, which we looked at last week. We said that there was no EQR required, so that's pulled through. We then go into, there's our materiality that we pull through as well. What's our general audit strategy? Preliminary assessment of the risk at financial statements level, if it's low. Are we going to look at testing key controls? Are we going to be performing modified or additional audit procedures in areas that you generally see moderate or high risks? There's that whole thing about the ways to alter your strategy for higher risks, like introducing unpredictability in your testing. So testing things in a different way because maybe the client is used to how you might want to modify things. Again, in a more complex audit, you're going to find a lot more information needing to be documented. In a less complex audit, a lot of the stuff might not be applicable to you at all. Key client staff, who are the key people that you're going to be discussing things with? It's good for the team to be aware of how to contact them throughout the engagement. Here again, we raise, are there any risks? And here, once again, you can just simply list those at the bottom and just indicate who has prepared it. This might be something that you also want to bring in while you're doing your engagement team discussion document. You could be having this discussion amongst the team. There's also a sign-off for the final review. Once you've done with all the planning, come back and make sure that you've addressed everything that you felt needed to be addressed. So it's a bit of a working document to give yourself some targets, and you can come back and make sure that based on your initial assessment, have you actually covered everything that you said you wanted to cover during this audit strategy document at the end of the day. All right. Document 12.10, understanding the nature of the entity. Okay. In fact, this is a little bit of an onerous one. There's a lot to document. We need to understand our client before we go and perform the audit. Again, I want to point out the existence of a lot of the dark blue areas. So we do, again, roll forward this information. So there is value in documenting this information in detail. But what we have recently, we've had a lot of feedback from users that have previously used RAC Micro, in which this document was just 10 blank rows for you to document your knowledge of the business. Now, we just felt that it was very, very difficult for us to be able to say, you know what, as a methodology provider, we can give you, if you've selected RAC Micro, that's the appropriate thing to do. We're just not comfortable with that approach, especially with the scrutiny that we're seeing with ISA315 and the extent of documentation that ISA315 is expecting. So what we have, though, done recently is we've inserted a sheet onto this working paper, which allows you to start scoping the level of detail that you're wanting to incorporate into this document. And essentially what we've gone and done is we've gone through a lot of the questions or a lot of the sections in document 1210, and we've basically asked a scoping question around these. So for instance, there's a section on group structure. So we ask the question, is the entity part of a group? And if you say, no, it's not part of group, what that's going to do is it'll switch off the questions on the next document related to group structure. So that is going to allow you to just reduce the size of this document and might enable you, where things are not applicable, to at least go and reduce some of the onerous length, basically, of this document. These yeses and nos are also roll forward, so this will carry forward to the next year so that you don't have to go and recomplete this each time. Although, once again, please always remember under roll forward, the fact that it's roll forward doesn't mean that it's correct for this year. You do need to go and reconsider those areas. But we do see one of the areas of concern around this document is that if to exercise professional judgment is given this document, they may very well want to go and complete every single blue block in this entire working paper, which is not necessarily the right answer. Many of these things could be just simply not applicable. So that's what we're trying to do with the scoping document. Is our suggestion is that before you give this document to somebody who's more junior and won't really know necessarily what to complete and what not to complete, go and do the scoping for them on this document so that they at least have less to be concerned about when they get to the document and can just focus on those areas that you're pointing them to. We do have a little bit of a caution, and that's basically going through what I've just told you about the scoping. We can't necessarily say something is not applicable. You need to make that as a professional judgment call, and that's why we're calling on users with the knowledge and experience that can do so to make this decision in each area. We have, however, and again, we can't take responsibility if you use this, but we have created the option to return this document to a RAC micro state, which would be just document your knowledge, understanding of the knowledge of the business with this question. But we do not recommend this. But we have seen the need. We have seen that there are instances where this might be desired by users. So we've put that in there, but please use carefully. Don't do this on every engagement, because then you're going to miss a more comprehensive understanding of what sort of information you should be gathering. And you won't necessarily be able to answer those questions properly and give enough detail. If you do scope out areas, please go and confirm with this little declaration to show that somebody with sufficient knowledge and understanding has actually gone through the been done by a junior clerk who's decided he is too lazy to do something. But that scoping is now built in. This is in the newest versions of RAC, which came up with our update last week. So if you're looking for it, you can go and update your working papers with this new working paper if you want to. Otherwise, in any new engagements or roll forwards, it'll become available as you roll it out. Okay. In terms of this actual understanding of the entity, under a lot of sections, we put out a number of potential risk factors for you to consider. Now, the documentation of this information is entirely voluntary. It's there really just to provide a little bit more information for you. Some firms like this, some firms don't. Again, as I've said, and I might say this many more times today, you have to use professional judgment in terms of identifying risks. It's not about trying to say yes for everything, because then you are going to be assessing risks all year and you're never actually going to get to the audit. If something is valid, say yes, tell me if it's business or fraud. And you can even go, and if you need to, go and edit the wording. It is locked, so we do just ask managers or partners with logins to go and edit it. But if necessary, there is space below to add additional information or additional risks if you so wish. And that will then carry through to the risk register as well. There is a question. There was a question. Oh, there we go. Sorry, there it is. If you are a firm that does not like, or you've just find your clerks like saying yes to everything on the risk register, you can go and switch off the potential risk factors. Again, not our preferred approach, but we do want to make it accessible for as many users as possible. And then what it'll do is it's not going to show those risks, but rather you'll have a section right at the bottom to go and add risks that you do find through this section. So folks, please use this with your professional judgment hats on. We don't want to delete stuff that shouldn't be deleted, but we also don't want to impose excessive documentation on clients that don't require that level of complexity. So it's there for you to use, and if you see the need, there it is to use it, but please look out for it. Don't just go and say no to everything, because then you might not be gathering sufficient audit documentation in your file to basically prove that you've done enough to say that you've identified the risks that are applicable and enable you to actually continue with this engagement appropriately in compliance with the standards. Okay, so on to our agenda for today, and I'm going to start with the next document, which is 12.15, fraud discussions. Now, the intention of this working paper is to serve as a questionnaire that you can go and sit down with management and various people within the organization and have a bit of a discussion around fraud with them. Very important document, this, because we've got to be having these discussions with our clients. So it's going to ask various questions, and it provides space for you to give any comments in terms of the feedback that you've gotten, and then identify whether it is raising an actual risk in the process. So based on what whomever you are interviewing says, is there a risk? And if so, document the risk. Any risk raised in 12.15 is automatically considered a fraud risk, because this is the fraud discussion document. So if you're raising a risk that is not fraud, I'd recommend going and documenting that elsewhere. We're focusing here on fraud issues when we're going through this questionnaire. Okay. There's also an action 2 where you can then go and document any responses that are inconsistent, to also go and make some comments around that. So if you go and speak to different people and they give you different answers, go and dig a little bit into those inconsistencies. The workbook is broken up into 4 different sheets. One is for inquiries with management. You might find that it's necessary to have this discussion with multiple people. Then go and document who those people are, the multiple people, but the comments are there just once. So it's not necessary that we now go and give detailed comments about everybody. You can just say, person X said this, person Y said that, so on and so forth, or they are in agreement, or they're not in agreement. And then I might want to go and document some more information around inconsistencies. We're looking at inquiries of management, inquiries of the audit committee. Now, your client might not have an audit committee, probably in many occasions, and then that would be not applicable. Then we wouldn't need to worry about what's going on in there. Internal audit as well might often not really exist, and so then you wouldn't necessarily be able to go and ask those questions. And then there's other staff. Now, again, depending on the nature of the entity that you are auditing, who this would be is going to be different in each case. On more complex entities, you might speak to the head of a creditors department. Whereas in a small entity, it might be the accountant who's also the creditors clerk, who's also the debtors clerk, who also does the banking and so on and so forth. So the call, but the intention is go through these questions with them, document any comments, and at the end of the day, are we identifying any risks? And then we again move on to in the other sections, we've got those inconsistencies, but hopefully we're not finding risks. If we are, and I do say that there is, for instance, a risk here, it's going to change the conclusion to, based upon inquiries, there were risks identified and it was transferred to the risk register. So those are the two conclusions that you would see there, depending on what you're documenting in 1505. Okay, not a very complex document in terms of structure, but a very important document in terms of content, certainly the fraud discussion document. Now, document 1220, the agenda for discussions with those charged with governance. Now, this is no longer related to fraud that we looked at in 12.15. This is looking at other areas where you might be required to have discussions with anybody who you would term those charged with governance. It's largely dealing with ISA315. And so you'll see the various paragraph references on the left. There's also one that pulls from ISA315 paragraph 15. And so what you'll see is the consideration of each paragraph, which says, if the auditor communicates with a subgroup of those charged with governance, for example, an audit committee or individual, the auditor shall determine whether the auditor also needs to communicate with the governing body. All right, what are we trying to get at here? The point is, here is a consideration of how we need to communicate with those charged for governance. It's not necessarily one particular instance of communication with those charged for governance, but it's speaking about if one of these things occur. If something around this occurs, here's some guidance. Go and identify internal reporting structures, consider legal and client expectations, and then give response how you address this issue and where you've actually gone and communicated various information. The point of this document is to serve for guidance whenever something comes up that needs to be communicated. Then come and consider, well, how do I need to communicate? Who do I need to communicate with? Am I complying with all of these requirements in terms of the ISAs, and therefore how do we eventually document it? You'll see as well it deals with significant quantitative aspects of the audit that's dealing largely with our management report. And so that's why some of this is detailing references to management reports. So the purpose around this document is for various different kind of discussions that you'll hold. It might be during planning, it might be during finalization, but where do you get this information or where do you get the guidance? It's here sitting in 1220 just to assist you in terms of any meetings that you hold during the course of the engagement. You can then come here and get the guidance that you need in terms of how or who or what you need to communicate. Okay. All right. Document 12.25 is now our laws and regulations document. Now, the first thing to be aware of is that the acts that populate here actually come from document 12.10. So if you appropriately in 12.10, then those applicable acts will automatically carry through to document 12.25. Now, I haven't done so, so I now need to manually go and complete which acts are applicable. But what we're looking for is specific laws and regulations recognized to have a direct effect on the determination of material amounts and disclosures in the financial statements. They need to be identified and evaluated on this financial statement. All right, so go and consider what is going to have material impacts on your financials in terms of amount or disclosure. We're not looking for acts that are going to have minimal impact on your financials. So we don't have to go and find all 500 acts that are enacted in South Africa and start documenting this information. Look at the questions that are being asked. Firstly, what is the act? Okay, that's the biggest judgment call in terms of what am I going to document. Then it says obtain a general understanding of the applicable legal or regulatory framework. Now, you might decide as a firm that you're actually going to create yourselves a little template document in which for every engagement you perform, you want this general understanding to be documented. And then for every engagement, when the VAT Act comes up, you can go and have, this is my general understanding of it. Then it says inspect correspondence with the relevant licensing or regulatory authorities. So go and have a look at the VAT recon, any letters from SARS. Go and search their SARS e-filing profile for any letters or demands or whatever. Then it says obtain sufficient and appropriate audit evidence about compliance. Now, depending on what you do here is going to change quite significantly. But I want to point out the word that it's dealing with here is compliance. Are they complying with the Act? Now, you might go and say, well, let's see if they've got a tax clearance certificate. And if they do, then they are complying with all the various requirements. You can go and have a look at their statement of account and see whether or not they're getting regular penalties or not. Now, you can't yet tell based on that whether they have fraudulently put information into various submissions. Now, that's obviously going to be part of my broader audit when I get there. But at the end of the day, we're looking for, are they complying in general with this Act? And is any non-compliance identified? If you have non-compliance, we're dealing with no CLAR. And we've actually got a very specific working paper to deal with any instances of no CLAR. It's sitting under working papers under additional templates 0330, considerations of non-compliance. If you identify potential non-compliance, please go and create a working paper with considerations of non-compliance and fill it in. It takes you through the required processes to deal with potential non-compliance. Doesn't necessarily mean your conclusion is there is non-compliance, but it helps you through that process. Okay. At the end of the day, are we identifying risks based on what we're seeing? So if we're seeing that pay as you earn, there's always a penalty. Is there a risk here? Is it business or fraud? And is there any audit conclusion that we could put in here? Hopefully the conclusion is that management appears to be complying with the requirements of this Act. And this is the steps that you need to follow for every single Act that you have identified that is applicable to this client. Complex entities, you're going to have less Acts that can have a material impact. More complex entities, it's going to be more so. All right. Now, this document picks up how many Acts you've identified in 12.10. And if memory serves, if I raise a 7th Act, it automatically opens space for an 8th. And I think there's space for up to 20 Acts to be documented on here. So we've just changed the layout a little bit. It did have a slightly different layout previously, but we've just found that this layout is easier in terms of running through it systematically. Doesn't get so wide that you're going to the right all the time. So work through those properly. There is also ISA315 paragraph 20 requires us to obtain sufficient information about suspected non-compliance, and has the procedures we've done above allowed us to get that level of assurance? Okay. If sufficient information about suspected non-compliance cannot be obtained, the auditor shall evaluate the effect of the lack of sufficient appropriate audit evidence on the auditor's opinion. That's ISA315 paragraph 20. That's why we're asking this question. Remembering that our duties around compliance don't stop here at 1225. And we'll see that in a couple of weeks, over the next 2 weeks, when you will look at audit programs, you're actually required there to indicate if some detailed procedures found issues around non-compliance. You might find that an act requires you to do certain specific audit procedures. Our kind of link to that is if you have an act, let's say you've got to have some sort of an environmental provision, you might want to raise that as a risk, and then you can go and do a risk-based procedure to address this environment for whatever the purposes are, whatever entity that you're dealing with. So again, professional judgment always does apply. You need to decide how much information, but again, more complex, I'm expecting to see more. Less complex, I'm expecting to see fewer, hopefully, that need to be documented on 12.25. But please remember the link from 1210. That's actually the best place to start documenting what acts are applicable. And then the intention of 1225 is to then assess compliance. If you need to do more than just a few basic procedures, you might want to go and document it in your own working paper, describe the procedures that you performed, and then put that documentation together. It might be that you can only do that when you get to the client. So then at least you've documented this evidence or this approach, and you can come back to it when you get to finalization to make sure that everything was done correctly. Okay, 12.30 is a review discussion of minutes of management meetings. Okay. We need to go and have a look. Did management hold regular management meetings or directors meetings? And are there actually minutes available? Okay. So we start by asking the question, what minutes are available, and provide any comments around it. Okay. Document matters, all matters in the minutes that relate to business, inherent, or fraud risk. So then we've actually got to go and look at those minutes and see, are these things addressed? Where do we see things about this? Have they ever discussed financial statement disclosures during their minutes, during their meetings? There's a whole lot of questions around those minutes. And then we split again this document into 2 sections, right? So we've got action 2, which is also in place there for cases where there were not meetings or there were no minutes. Where the client has not had meetings or has not had minutes, this is then a questionnaire that you can then work through with the client to go and make sure that the most important issues are identified and discussed in the file. So that, have you actually gone and had discussions about bonuses, about authorized and issued share capital, about weaknesses in internal control? So you're now instead of doing a review of the minutes, you're going and you are documenting a discussion with management around the key issues. Now, in a case of where there are minutes, you can document the summary in this working paper. So what type of minutes, what's the date of the minutes, and what issues were identified? So did you see issues around business and fraud risk factors? We say go and put a little bit of a description in here. Obviously, folks, there's not a lot of space provided. So you might want to create a hyperlink to a working paper where you've got more detailed information, especially if what is being discussed is very pertinent and important. Again, we ultimately get to a point of, are we raising any risks at the end of the day? If there were no minutes, we then use this sheet and we then go and say who we had these discussions with. So that refers back to this document. Who did we go and have these discussions? Is it multiple people? and then you can say, well, what information have we gotten from them on all these questions, and then do we raise any risks? So what's the risk, and is it business or fraud related if you do find any risks? Again, there's a lot to document, so it's very hard sometimes to create a working paper into the right format, but this is what we're trying to get at. Has management, owners, directors, key personnel in the client, if they're not having regular meetings, we've got to get this information from somewhere. So we've got to document it in some way. And the only way we can really get that information is then to have an interview instead of looking at the minutes, especially if we're dealing with one-man owner-operated businesses. They're not going to keep minutes. I get that. And that's what this is for. We don't have minutes, so we can't put in a date, but let's document the information that we gathered from our discussions with those people. So that's what 1230 is there to do. It's there to provide a record of information from what should have been in the minutes, whether there are minutes or whether there are not minutes. So depending on the circumstances, go to the correct sheet and document the correct information accordingly. All right, 1235. I haven't answered 1210 correctly. I haven't said there is internal audit, and therefore everything on here is closed. So I actually need to go to 12.10. I need to find the question on internal audit. Hopefully I can find it quickly. Do you intend to place reliance on auditor? If you are intending to rely on internal audit, then document 12.35 becomes applicable. And we now need to go and document our knowledge and understanding of the internal audit function within that entity. If you're not doing internal audit, obviously we're not worried about relying on internal audit, and all of this becomes not applicable. And that's why you saw the sheet as it was previously. But we ultimately need to conclude on whether we can use internal audit or not. So then we need to go and actually do work on internal audit's work to document and get an understanding of the adequacy of the work that they're doing, for us to actually be able to rely on that at the end of the day. So only if you are relying on internal audit do you need to complete these. It then takes you through that process. Who's involved? What procedures are they doing? Actually physically going and reperforming or doing other procedures to assess their work. Because if you're going to say we rely on internal audit, there's always a risk there, because they're paid by the organization to do specific work. So they might be paid to lie to you as well. So we do need to assess them appropriately. And that's what document 12.35 is intended to do. Again, I'm not going to go into this in too much detail. I don't think it's widely used anyway, but just to understand what this document is for, hopefully that pretty much covers that for our purposes. A lot of the time, it's not going to be applicable until such time as you want to rely on internal audit. All right. Our next document is 12.40. And sorry, I just want to close some excess tabs here. Okay. Document 1240 is dealing with entity level controls. It has, again, it's one of the areas where we have put a lot of emphasis following the ISA315 update, because we see the importance of this becoming far more significant under ISA315. The document did exist before, but we are making it a far more critical element of our engagement process. So if you've always skipped 1240 before using RAC, please, you cannot just skip 1240 anymore. There is a lot of important information going on 12.40. But I don't necessarily want to get into the detail of every single row. I'm going to take you through completion, but I want to highlight this as one of the key areas where professional judgment needs to be applied in an engagement. We are ultimately wanting to make an evaluation of the control environment within an entity. And to do that, we largely look at entity level controls and we look at IT controls in 12.45. We'll get there shortly. The reality is that in a less complex entity, you're going to struggle to find an answer to every single one of these questions that applies within an entity. And that's why the very first question we're asking you on these various sections is, does the entity level control exist? And if it doesn't exist, it doesn't exist. We're not asking you to invent stuff here. We want you to be truthful and honest. That's what we are as auditors. What we want to highlight is consider the end result that you're wanting to achieve with this. We're wanting to say that we're hoping to be able to say that there's a good control environment in the entity. And the fact that it is a small company with very few controls does not necessarily mean the control environment is poor. Consider an owner-managed business who has one accountant. You might want to start saying, hey, there's a risk of segregation of duties here because there's not enough people to do different types of work. Well, that's appropriate if you're dealing with a complex entity and they only have a few staff members in the accounting department, or maybe one. But the reality of an owner-managed business is, to a large extent, I'm pretty sure that that owner-manager is the only one who has access to make payments. And so the chances of his employees defrauding him by making up new creditors and fictitious invoices is very, very small, because that owner manager is going to know about the parts that were ordered, and he's going to know about the assets that he purchased, and he's going to know about the cleaning equipment that got brought in. He's going to know about the debtor that is late with payment, or he would be suspicious if suddenly there's a lot of sales to somebody who he's not seeing the stock go out to. So it's very difficult for somebody to commit fraud against the owner manager. That owner manager might be hell-bent on not paying taxes. I get that, right? But that's a different issue that we're dealing with here. But the fact that it's one person does not mean that there's a poor control environment. I would argue that actually there's a very strong control environment. There might not be a lot of transactional control the entity operates. We can't say it's a poor control environment. But if that's this ultimate goal, we're wanting to say that there's a good control environment, we want to work backwards from there and say, well, what do we need to document to prove that there is a good control environment? And for a small, non-complex entity, it's not about documenting 26 controls. It's about documenting what is required to support the conclusion that we're wanting to get to. And so my suggestion is to start with action 5. I know this sounds backwards, but consider what we're asking in action 5 is, what is our overall assessment of the effectiveness of the entity level controls? Are they effective or ineffective? And then provide the principal reasons. You might decide that to get to that answer, all I need to document is exactly what I've just said about, for instance, there's only one person with access to the banking, and therefore we feel that the control environment is actually effective. I don't need a complicated control system to do that. So then you can go and work backwards and say, okay, where do I plug this in? Do we consider it under risk assessment? It wouldn't really fall under HR, but go through and see where can I go and say, you know what, this is a control that exists. Now I document my understanding of those entity controls at the client. So we go and document in detail. Again, please note is going to roll forward. Is a walkthrough test required in terms of ISA315? Well, folks, if we are wanting to determine that design and implementation is effective, I've got to do a walkthrough. So now I go and do the walkthrough, and I go and I try and log in onto that client's banking profile. So just go and document that walkthrough. And then we make a determination whether the design and the implementation is adequate. Now, based on that, I conclude on whether a test of control can be performed. But I don't necessarily say I am going to test the controls in detail. And I might not do that because I might decide that it's more appropriate for me to test with just substantive procedures. That's okay. That's not the decision we're making at this point. I'm looking at entity level controls. What's the control environment like? If I say it's not appropriately implemented or designed, then it's going to ask me to reference to the control weakness and document any risks that we might determine based on the fact that this control is not working as expected. Let's say you try and log into his banking app and 1, 2, 3, 4, 5, boom, you're into his banking app and that's it. You can make fraudulent payments without any issue. I want to report that to management, right? But otherwise, I just want to get to this conclusion at the end of the day. That's my goal. So depending on the complexity of your client, decide what you're going to do, how much detail you're going to go into, and you can document what's coming in here. All right. If you find additional risks, now, because we're dealing with entity level controls here, we don't see these risks as being generic or general assertion level risks. We see any risks that you raise in this document as overall financial statement level risks. But you might find that while you're testing, you're finding other risks that could be assertion level risks, and that can be documented in action 4. But at this stage, unless you are specifically finding controls and specific assertion level risks, you don't need to worry about that at this stage. So here you're seeing document those risks at the end of the day. Okay. Then we come back to the conclusion again. Is there a culture of honesty and ethical behavior? Have I done something above that addresses that? Does it provide an appropriate foundation for other components of the entity's system of internal control, considering the nature and complexity of the entity? Have I documented something to be able to say yes in these? And sometimes it's minimal. Oops, sorry, that last one mustn't be yes, it must be no. Does the auditor identify risks of material misstatement that management failed to identify? When we spoke about risk assessment, are you finding a whole lot of risks that management has no clue about? We want to document details for him. And is the entity's process for monitoring the system of internal control appropriate in the entity's circumstances, considering the nature and complexity of the entity? Please note how we have framed the question very specifically in the context of this entity's complexity. So what I would expect for owner managed is different from what I would expect from a multinational. So please bear that in mind in answering these questions and coming to what we hope is a conclusion where we say the entity level controls are effective. Folks, this is not a transactional level control where I say, am I sure that revenue is processed correctly in the accounting system? That's not what we're trying to address at this level. We're dealing with who are you employing? what's the overall accounting system like? We'll deal more with that under IT controls, but it's high level financial statement level stuff that we're wanting to deal with. Sorry, I got that wrong. Action 4 is not assertion level risks. It's action 6 is assertion level risks. This is just for any additional ones. So if you find additional controls that you want to document that don't necessarily fall into one of these 26 odd categories that we've given you, and this might be all you document for your owner managed business, you might just want to, instead of going through which section should I put it in above, just document it here in action 4. Here's my control management. The owner manager is the only one that can access and make payments. He's fully aware of payments. You can maybe go and look at a few payments on the bank statement with him, for instance, just for argument's sake, and say, here's a payment for so-so. Why do you pay this company? And he might tell you, well, that's where he gets this raw material. That's where he buys that service from. And you can see that he's got a good understanding of what's going on in the business. Then I can maybe say it's effective. So, sorry, action 4 there is just a summary version of what you're seeing in all of these questions. If those questions are too onerous or you don't necessarily want to break up your control, 4 is for summary. Action 5 is the conclusion, and we take this conclusion through to section 13 that we're going to see in a moment. And then here you can go and document any additional assertion level risks that you find while dealing with entity level controls. So folks, please come to action 5 and make sure how much detail you need to get here. This is our goal, that we get to say it's effective. If you feel that's too much and you're not going to assess the entity level controls as effective, you might want to then see, well, what is that impact going to have on my audit? Do I need to raise my risk levels in other areas? Because now even at entity level controls are failing. You might decide that you're not going to do any control testing when you do the engagement. That's okay. We still are hoping generally to find that the entity level controls are at least okay and effective. So work backwards. The amount of detail in this document is determined by what you want to get to in the conclusion. If the conclusion is ineffective, I'm never saying please go and make it up as you go along, folks. You need to document only what's applicable and only document the truth. But the point is to help you on those smaller engagements, start here and work backwards and see what's needed. The first part of document 1245, IT controls, is very much the same as what we saw in 1240. So if you're watching this video at a later stage and want to see what to do on the first sheet, please go back to the 1240. At the end of the day, here we're coming to the same, we're coming to try and find a conclusion on the entity's internal control environment. And we're hoping to find that IT general controls are effective. Now, I just want to point out very specifically around IT controls. Please go and consider if your client is backing up his data effectively. We are seeing more and more ransomware attacks. We've seen a few clients that have been hit by this and they lose all their data. And folks, this can close businesses down if you lose access to your financial data. It is a big issue for clients to lose data. So please go and check that they're doing backups and actually testing those backups. If you see that any one of your clients has not got a good backup protocol in place, I would definitely raise that as a significant finding on their management reports. You could even raise this as a going concern risk. It is that important. Businesses can fold over this. But go through and understand their general IT environment. How do they do backups? Are there personnel there? What kind of network do they have? All of this can have an impact on the financial statements, and that's why we're wanting to get this idea of IT general controls. But like we saw with 1240, in 1245, come to the conclusion and work back either in action 3 or in action 4 if you not want to go through all the specific detail, and then go and document any controls, go and document the walkthroughs, etc., as you go through. Again, you can raise any additional assertion level risks, and provided that you can have a look at and consider in terms of your process. Now, in 1245, there is an additional sheet which looks to assess the IT applications used by your client. Now, if you have a simple client that just uses Pastel Partner, we've done a little bit of a pre-completion of the questionnaire for you in the gray. And you might say, yes, we do use Pastel, and you agree with our answers. Fantastic. Some clients have separate accounting systems for dealing with inventory or fixed assets, or maybe even a point of sale system that's not directly linked, or it's not part of the Pastel system, but it gets journalized in. This is what this document is for. So we could say other IT system and indicate whether or not the entity uses it. Is it a standalone? Is it a purchased application? Are there changes limited to vision changes? Folks, there's a lot of questions here about that IT system, and what we're trying to get to is whether this is a complex IT system that's going to result in me needing to get the use of an IT expert, or is it a simple system like Pastel that I, as an auditor, I can have sufficient knowledge without the specialized training to audit it at the end of the day. And so I just want to put in a few no's here. I think that'll give me the answer I'm looking for in terms of this being a complex system. There we go. The application is complex and therefore likely subject to risks arising from the use of IT. And so I should consider the use of an IT expert when I'm dealing with this. All right. Once you have completed everything in action 7, you can now go and say, well, which system impacts which component of the financial statements? And it's important, folks, to complete this properly. These cycles, I should say, rather than components. No, sorry, it is components, not cycles. These components are populated from document 1210. So if there's items missing here, then it's because it's missing on 12.10 and you need to go and reconsider 12.10. But you now need to go and say, firstly, do you intend to test any controls related to the system? Yes or no? And then what components does it impact? Now, Pastel, for instance, would impact everything. But you might say that this other IT system only impacts inventory. Now, it could be valid that both are yes like this, because you've got to journalize this across, right? This is integrated. It's sitting on the trial balance as an inventory value. Or do I physically import 2 different trial balances, therefore it's only in one of them? But that's the intention here, because again, I carry this information over to my system description. So for just use later, I'm going to say that this also impacts property, plant, and equipment, because that's the actual system description that I want to run through with you in a few minutes' time. Okay, so that's document 12.45. Document 1270, it used to deal with estimates as well. That's now been moved to 1280, which we'll touch on in a moment. But this is really just dealing with a presumption of revenue as a fraud risk. Okay. Now, all we're asking you here is, are there valid reasons within this entity that we might want to rebut, or in other words, switch off the fraud risk in revenue? Do anything more? Revenue is a fraud risk, end of story. If I say yes, I can rebut this presumption, we're asking you to give us reasoning, per assertion that you can actually rebut revenue as a fraud risk. We ask it for all assertions. There's nothing that says only completeness is my fraud risk. That's a misunderstanding of the requirements. All assertions can be affected by our revenue fraud risk, and therefore I must provide reasoning for all my assertions. Folks, this is a judgment call. You're welcome to you're welcome to just say no and just accept revenue as a fraud risk. But if you do want to rebut it, we're asking, please go and make sure you've got sufficient reason to do so. Don't just do it because you're too lazy. All right. So 1270, there's not really much more to go through in that. If you say yes, it'll take off revenue as a fraud risk, but you do need to go and just give us that detail before it'll do so. $80 is, and it's been here since the ISA315 review or the update some years ago. This deals with our estimates. And the estimates are broken up into two parts throughout the engagement. And all we deal with in 1280 is recognizing or identifying the estimate. And so we go and put forward a whole lot of potential estimates for you to consider. It's a long list. We're trying to be as comprehensive as possible. A lot of these might not exist, and you can simply ignore them or say no. But we ask the question next to each one, made an estimate in relation to any of the following components. So we get to something like property, plant, and equipment useful life. I don't know what your clients are like. Mine very often had no clue what they needed to do around the useful life of property, plant, and equipment. And so they would just depreciate them like they used to before IFRS SME brought this thing in of useful lives and residual values. And very often it was the auditors who would go and have a look and see, is it reasonable or not what they've used? They probably used the SARS tax rates. Has management made an estimate? And you could probably argue in this case, no, they haven't. They've just used a number because they have no idea what else to do with it. So we don't want to go and create work where there is none. If management is not actively reviewing useful lives, checking, testing useful lives, then we're not dealing with the management estimate. We may want to raise a risk that management does not assess useful life, but that's not really an estimate risk. Estimate risks, we're looking for management bias. And so I'm not really worried how if they're not doing something. I'm more worried here if they do, because what management can do is use estimates to inflate numbers for their purposes, like revenue determination of revenue with regards to stage of completion or fair value or long-term contracts. Management might be wanting to push up their bonuses because their bonuses are linked to revenue. So they might be, wherever there's a stage of completion, they'll say, oh, it's 80% complete where it should be 70, to inflate revenue, to inflate their bonuses. That's what we're trying to do. We're trying to look for any sign of management bias related to the estimates that they're making. Yes to all. And we're not looking for stuff that's irrelevant. We're looking for items where management is actively making some sort of an estimate for those areas to be identified. And the moment I say to of these, it then automatically goes and puts a section reference and a working paper reference in for me. And when we get to this, we'll touch on this probably next week, where we go and look through the detailed document. So step one in estimates is identifying the relevant estimates. Then when we get to the estimates working papers, we've got to document our knowledge and understanding of these estimates. But there is a lot of information on that evaluation and documentation of each and every estimate that is actually common. So we have designed this document to also ask a number of the same questions that you'll see when we get to the individual sections, but pre-populate that information for you in those areas. So especially if you're dealing with an owner-managed business, he's probably the only one who's dealing with estimates. So document your knowledge about this information. So what's the experience and competence of those who make the estimates? It's going to be the same answer for every single estimate. So put in the details of that person. Document the review process for approval of accounting estimates by appropriate levels of management, and where appropriate, those charged with governance. Well, it's an owner-managed business, so there isn't any detailed review process. Document that, because then it's going to pre-populate to every single one of my estimates documents. That's the idea around this sheet on 12.80, to pre-populate information. If you get there and for that estimate, the answer is not appropriate, you can obviously change it on that working paper. We're just trying to find a short for you, especially for smaller entities, where you don't have to go and answer the same question 20 times, because it's the answer is the same in each case, just to help you out with that. So 1280 is really just about setting the platform, but next week when we look in more detail at the sections, we'll go into the detail of that document a little bit more. So that's 12.80. So document 1330 is the one I've chosen out of section 13 to show you. But you are going to see an identical document across every single one of the 13 series. We are looking at documenting our understanding of a business cycle. We start with what are the laws and regulations, what are the policies and procedures. So are they measuring PPE at fair value or at cost? Are there standard journals? So do they do monthly depreciation journals? Or are there any non-standard or non-recurring journals that get put in each year? There is nothing to distinguish it with at the moment, but these are all the darker blue. So this information will roll forward. So it is a good idea to document year one. We have tried, if you have used our index sheet before to document this information, we've tried to pull some of that info in, but it has been difficult in some cases, depending on how it's been documented. But what we're looking for is we're now addressing the cycle for the first time. We're looking at fixed assets and investment property. What are we doing? And what are the sources of information that we use, or not we, but the client use in this PPE cycle? Right now, action 2 is pre-populated for me, and that comes from 1245. What IT applications are used? And in this case, PPE, I said only the other IT system and not Pastel. So that's pulling through that documentation from 12.45. Okay. I said to you that I wanted to do this so that you can see that it pre-populates this, and that's the link from 1245 to section 13. Now, a lot of users have contacted us and said, well, this is a very difficult document to fill in. It's a lot of information, and we get that. There have been some changes, so it might look a little bit different already to what you used to, but we've added a question here to ask whether you already have some form of other system description that you'd like to use instead of documenting the detail of every single step in the process in our table format. So you might already have a Word document or an old PDF or an old Excel spreadsheet that you've used to document your understanding of the system. Then you can go and say, yes, I want to just document that. All right, not a problem. It'll just take you through reference to where it's going. And then action 4, we're only dealing with controls that we're actually wanting to test. And I'll touch that on in a moment. Use this as your major system description. Then please make sure that the detail that you capture here deals with everything from initiation to final recording, to testing, to whatever might be related to this cycle. You've got to document everything here. If I am, however, going to be using my own system notes, I want to, again, the same way we approach 1240 and 1245, I want you to see the result that we're looking for at the end of the day is whether or not the controls specific, and now remember we're dealing with cycle-based controls, actual transactional controls, are they effective for PPE? Now, at this point, you might say to me, Leon, I don't want to test controls for PPE. Fantastic. I can just say controls are not effective. I've not identified controls. In other words, I'm not going to test any controls when I get to PPE. End of story. I don't need to document more details. The idea then for me is to at least document only those we are expecting to see control testing necessary. Now, there is a bit of a circular process that happens between section 13 and section 15, which we'll get to next week. You might identify a significant risk related to PPE. And then you'll see, hang on, but I haven't actually identified any controls for that component, that assertion. And then you need to come back to section 13 later to document anything around that control. I'll go through the detail of that next week, but just to point out what this action 8 is doing. If I get to section 15 and I find a significant risk related to PPE and I don't have any controls documented, then I need to come back here. Let's say I do want to consider testing some controls in the PPE section. What do I now need to do? I need to go and start with, sorry, scrolling a bit too quickly here, document the control. I'm going to say this is for completeness of PPE. Okay. So now I go and document my understanding. Description of the specific control that exists. Okay. What is the actual control? There's the understanding of the system. Here's the actual control. What component does this relate to? Property, plant, and equipment. All right. Which area of the process in the cycle does it deal with? Is it initiation, authorization, recording, processing, reporting, safeguarding, or physical controls? I'm going to say physical controls. What assertion does this control address? I'm going to select completeness in this case. Is it a manual or an IT control? Now, if it's IT, which IT system does it relate to? If it's a manual control, then obviously we don't need to document the IT system. How frequently is this control exercised? Maybe it's monthly. Is it a direct or an indirect control? Who's the person responsible? And because I know in advance that I'm wanting to test this control, I can now go and document a walkthrough, and I need to conclude on the design and implementation, exactly what we saw in 1245 and 1240. But now it is a transactional level control. It's not an entity level control. It's something that deals with property, plant, and equipment, completeness. Is the design and implementation effective? If it's not, I can't test the control. Have you seen any risk? And again, is it a business or fraud risk if that's applicable? I'm not seeing any risk. What does this then do? It updates here. All right. Are the control environment, firstly, this question, is the control environment and IT application controls effective to allow for the tester controls? Remember, I was telling you the importance of 1240 and 1245. If we're not seeing that as effective, then folks, we can't be testing controls in general because we're saying the environment is faulty. But I have said it's effective, so I can say here, I'm happy that in the context of this entity, those controls tell me that overall the IT controls and the general controls are good, so I can make a conclusion about this. It goes and says, okay, I found one effective control and no ineffective controls. It might be that you found 3 controls and one wasn't working. that doesn't mean it's ineffective. And that's why I don't automatically give a final conclusion on effectiveness or not. You just need to go and say if that control ultimately is concluded on as effective or not for each assertion of each component. And the same applies now to depreciation. Okay, I'm just going to say here effective. That's the general IT controls and the control environment. But I've not identified any controls. So I can just say for my purposes, I can assess controls as ineffective. I'm not actually going to test them in any way. I'm just going to follow substantive testing. So for like 1240, 1245, this is the summary we're wanting to get to. Very often, I know this is the truth. I know this is the reality. You will know up front that you want to test controls, say, over revenue and maybe one other area. So it's those two areas that you need to go and focus on in section 13. The others, you might just go and put in your normal system descriptions and hyperlink them in and just document everything else as effective. If you have the time and the budget to do it, it is good to put your controls into this layout, but we're not saying it's compulsory. We're saying the minimum documentation in section 13 is those controls you actually intend to test. Because when I get to section 15, I need to copy this control description to section 15. So I've got to document this information to create the link. So please understand the interlinked nature of document 1240, 1245, section 13, and that we'll look at next week, section 15. There's a link between these documents that you can't just skip one and move on. If I don't know what IT systems are in use, I can't continue here. You can't conclude on controls if you haven't looked at the entity level and IT general controls and seeing that they are effective before moving on. It's warning you here that if I did, for instance, say that this was a IT control and it impacted or it was using that other IT system, it is showing me that I might actually need to use an expert to test this system. It's just bringing that conclusion through for me. But for today, it being a manual control and remove that IT control question in that spot there. Okay.